Hello guys, glad to have you on board again. Today I'm going to do a quick one today because I have an appointment later in the morning, so I don't have much time available to record both the French and this English version. I'm going to try being as fast as possible, still trying to give you reliable information. So obviously there is a lot to talk about, I just unfortunately can't say it all, so I'll stick to the essential. Yesterday we had the Fed. I don't even know what the hell's been said, what the hell's been done. All I can tell is that the market so far is pretty hesitating and topping up. That doesn't mean that I don't really expect the SPX to be really topping in here, but we're dealing with a very interesting area, and I'll share you my doubts. So in here is an intermediate level podcast, but as tomorrow is going to be a holiday, I'm going to try making somehow a intermediate to confirmed and advanced level podcast in the same time, so which makes it a lot of things to talk about because we're going to have to talk about reversal trades in here, and there is quite a lot happening with the Fed obviously, and I don't have much time, so let's get straight to it. I think most of the scenarios I had in mind are now heading finally to what fucking validation. The USD/JPY is reversing once and for all, failing below that resistance after obviously trying it out with the Fed. So we'll see if we can finally break down this supportive area and fuck up this trend channel, which I'd like to see. That would just end up this potential accumulation, which I still tend to believe it makes no sense. But it will actually give me a little bit of a breather in terms of risk management. That means we'll likely find a bottom on the VIX in the nearby area as well, meaning that yes, we can try to digest in here for a little longer, but we found some support volatility levels out of 12.2, which is obviously a stupid level as hell, as none of the actual underlying dangers have been solved. The Fed is still highlighting those dangers, obviously. We have no deal, we've got just talks, and that's great danger because now we're bracing for the best. We also had Apple's earnings yesterday, which weren't that bad, but certainly not as great as people would expect them to be, because don't forget that they launched the product in a different scale, which means people expect it to scale up for Christmas. Problem is, all of the pre-sales have been done, so I don't necessarily think that December will be as huge as people expect it to be. At least that's a big question mark in here. So Apple still pending. I just took out my previous speculative trade. I still have my background swing trade still in the game, waiting for few and further informations. Regarding the stock market itself, we do manage to somehow build a top in here. We're 107, we're 5% above the previous market top, which tend to believe that this is the moment we start to break out support. So if you take the overall big run, like bottom to top, all right, like 2009 bottom to the 2018 top, which personally I think is where the economy topped up, like not necessarily the market, because whatever we've done this year with the crazy stock market in the US simply isn't replicated anywhere else. There was just a few indices worldwide who managed to make historical highs afterwards, and they're very rare. Most of them just remains below 2018 tops. So I would tend to say for now, in the global way of seeing the economy, we're still trading below historical levels. And therefore, if you just take out bottom to top of this area, we're just 5% away. So it isn't a big deal. It's just, that doesn't mean that we're going to have to react exactly in here. All I need, as usual, is to have a context to deal with. So the context we have in here is what I hate, because it's hesitating. We definitely see a first wave in here, second wave, all right, we've made historical highs, so this looks like a trend trade. But the thing is, could this just be like that? With a tiny breakout in here, we can see that we fucked up some trend lines, some sine wave targets, but we also see that we've been digesting in here for a little while. The problem is we barely got to 50% of the context channel, which means it's possible and viable for a pullback, but it also doesn't necessarily respect all the rules. But it would be, in that perspective, wave 1, 2, 3, wave 4 pretty much flat, and this will be the final excess. We clearly retraced up to the resistance context, we have some breakout targets, so this is definitely the moment the market is overextending and could reverse. So for experienced traders only, those who wanted to deal with that reverse, you've got everything you needed, ugly divergence and stuff like that, cyclical activity is okay, so you could have sold the after Fed. Problem is, that's dangerous because obviously you don't know what the hell's going to come after this. So it's a dangerous reversal. I personally hasn't been taking this one. I was off yesterday evening, so I missed the shot, and those who took it, I mean, you're pretty fine. You can really put a stop loss right in here. We nearly gone, I think we're very likely going to test the trend channel pretty much sooner rather than later, so you'll be able to secure your trade. You let it go. Confirmation obviously means reaching out to this area. I doubt that we can go any way further than that, so like dipping a toe in here, retracing. So if these things happen, for more intermediate level traders, you know what the hell you're going to be doing in here. Don't look out for a range trade, look for a bearish range, which means we're very likely going to reverse out of 61% fibs in here. So I give you the early tip. Obviously, it would be nice to have some confirmation, but I think we're going to have that probably on the 15-minute context, and probably something that will be dealt with tomorrow. So on the holiday session, I think it's very likely going to happen with the futures market. I need to confirm that information, but I think futures market will be open tomorrow. Yeah, obviously, it's just a social holiday, not necessarily a market holiday. So tomorrow will be open, probably less volume than a normal average day, but I mean, that's it. Still, I think tomorrow will be the interesting catching pullback type of trade for those who are less experienced than the most ones of us. So if you miss the reversal, obviously no big deal. All right. First of all, the reversal is still not yet validated, so wait for it to confirm it. And if it is, then you know what the hell you're going to be doing afterwards, catching the pullback and stuff like that. Now let's have a look at the broad-based version of broad-based answer we've got from the market out of these Fed meetings. So we're trying, all right, to reverse this thing, but I sincerely doubt that anyway we're going to find some support in here, that we're going to reverse in here. So I don't believe this overall direction for the yield curve means that even what the Fed tries to do to calm down creditors and debitors, to maintain sustainable levels of credits in a very dangerous credit environment. So I still tend to believe that no matter how they try, this is an unreachable goal. You just can't get to lower interest rates, though put pressures on the bank risk-taking, and in the meantime, forcing them to put risk and to credit to allow credit to people. So it's a huge, I think, misunderstanding of the way economics works, simply because that was the previous paradigm. We know it's unsustainable, but we just wanted to keep it going. So at least we want to see if we can hold on to the next month and the next meeting. So does that question finds an answer right here, right now? I can't stress that enough, because there's not enough information so far. So I'd like to see what happens in the next following days and probably early next week. Is this just an early pullback that we're facing right now, which is very much probable, or do we face a potential reversal? I mean, all the uncertainty I have is surrounded by this thing I've been telling you earlier. I don't know if this was enough of a pullback, or if this is just still the third wave, meaning that we'll have a pullback and a final excess to come just right after. In this prospect, all we could have in here is just a range trade that will probably put us back to support, typically 23% or 38% retracement, and we're very likely going to have a final bursting wave, a final excess afterwards. So this is my major question right now, which I think if you get to take those early potential reversal trade or try to take the pullback, be aware that there is a high level of risk that you might be dealing with a pullback trade. And in that perspective, that means don't forget your fucking profit taking out of the 23 or 38% fibs, because at least if you get to end up in trading a pullback, then at least you'll have a tiny gain to have in the pocket. So don't go maximum risk taking, the thing I generally tend to do, which means whenever we reach out to supportive area, I don't do anything but just putting a stop loss at the market top. I suggest you take a little bit profits in here, even if you are an aggressive trader. All right? What else? So broad-based indices have been retracing, obviously still the same ones in the front row, so I still maintain that my direction for the FTSE, which I think is the most dangerous asset in here, the one that may be triggering these types of trades, like a huge drop down. I mean, 3 consecutive negative tops, we already have lower lows, so it's just a straight open door for more bearishness in there. I have this one in the portfolio. What the fuck is wrong with that? All right. So I'm looking forward for catching those two. All right. I want to have them. I've been stopped, so I need to find them again. What else? What else? What else? What else? Gold, obviously. How did the precious metals react? They react pretty bullish. We go back to resistance. That simply doesn't mean we're going to break them up. Remember that we have a strong failed breakout in here. But yet we failed to go on the opposite direction as well. So it's hard to say what the hell that is. All I can tell is that the nearby area we're dealing with right now is really huge importance. So this will be monitored and has to be because if we finally get to break up, then you can be sure that we're going to rally for $100. If we fail in here, then it's probably the opposite way, which means a rally to the downside for $100, which is, all right, pretty much a drop. Silver is following accordingly, so all right, that's the deal. Euro dollar, I think lots of people were expecting this area to reverse, but just like I told you, I don't think it is. I think the goal in here is most likely to digest sideways prior than leading up to the upside. So I still believe that we've gone way too far with those euro dollar trades. So reversing with the Fed just makes, yeah, a lot of sense to me. We're dealing with a target, and I certainly don't think we're nearly going to break that up, which means we're locked in here for 30 bars. Simply doesn't mean that we have to retrace. A lot of people tend to make it that way. Like, all right, we can't break the resistance, so we have to pull back. Yes, but we can also digest sideways, which is exactly what we've done to the downside. So I very well believe that this is the motive in here, waiting sideways, low retracing prior to move right before moving higher, simply after lateralizing the target. All right. GBP follows accordingly. It's more likely a broad-based dollar thing. And just like I said, yen is finally reacting as well. So we don't have yet the yen index moving up, but as you can see, the USD JPY, which is the heaviest influencer into JPY index, is clearly moving down today, which means yen index is validating its fucking supportive area. I think we have it like this was just an early bullish signal. Now we just pushed a little bit lower to go find some traders or whatever, and now we're higher. We just overloaded the bearish momentum, and I think we're going to build a nice bullish wave. So huge concerns for me because we have positive reversal signals on risk assets like VIX, yen, dollar going down. So we've got everything we need to fuck up Wall Street. But the problem is, I doubt we need to be really aggressive with Wall Street right now. And I'm ashamed I totally missed yesterday's trade because, god damn it, if it doesn't reverse and if it doesn't pull back and if it goes straight line, I mean, you know that right now, I mean, currently for the latest weeks, I was pretty unlucky with the market. So if it just fucks me up this way, like taking my stop loss and doesn't allow me to trade the Fed yesterday, so I'm out. And like I said, I woke up a little bit late earlier today, so which means I totally missed this shot. So I goddamn hope this is not just the thing that reversed the market. But that's probable. If it is, then I'll try to catch some trades with lower expositions afterwards. But yeah, we've got a lot of things going on in here. I mean, anyway, even if I miss those things, I still have a lot of assets in here. So if Wall Street just falls like shit, I'm definitely going to make money anyway. Just, I've been dealing with this fucking SPX and indices for quite some times. They've been taking some numerous speculative trades down. So I really want to be in them when they actually reverse. So if I get to miss the shot in here, I'll be really pissed off at some point. Just because, I mean, I don't control that. Like I said, it might be like luck or bad luck, and you certainly can't be lucky every time. But I mean, god damn it, being unlucky recently is really my thing. Like I missed the WTI, I missed all of them. So I don't know what the hell's coming next. I just know that anyway, if anything shows up for risk taking, risky assets rising, I'll profit from this. Just eventually a little bit less than I would expect it to be regarding how hard I work to catch the reversal. Just missing it would be a shame. But I mean, that's it. I can't be selling just right now out of supportive area just because. All right. But you have to assess that if gold is breaking up this area, if yen is surging up, and if VIX is breaking resistances, how the hell can you think the stock market will take it? It's obviously going to retrace. So like I said, hesitating scenario between just a pullback and an actual reversal. I think those who try the reversal, you're pretty fucking fine. So stick with those trades, hold them, just partial profit take on the taking profit areas, and hold it on for swing trades if you can. All right. I'm sorry, I'm going to leave you guys with that. It's really, it's a little bit too rapid today. Oh, have a look at the EURJPY as well. I think this one has made a early flat range, so I think a little bit more patience, but this one's very likely going to be interesting sooner or later. So it's something to bear in mind as well, probably tomorrow or eventually next week. All right, waiting for next week wouldn't be a big deal in here. All right, that's it for today. I'll have a look, obviously, at how Apple will digest. If we have a bearish day, I want to see if these guys are selling them after the earnings release.